Hi investor, welcome back. In this video, I will show you step by step how to trade futures on Binance. So after watching this video, you should be able to take your very first trade on futures and also be able to master the different tricks on how not to get liquidated on futures. If you haven't set up your Binance account, use the first link in the description to create one. By using this link, you will receive a sign-up bonus up to $500 in cashback reward. So let's begin. First of all, you need to be logged into your Binance account. Then on the top left hand side, click on or highlight the futures. You'll see we have the USDM futures, which stands for USDT futures or US dollar stablecoin margin futures. As you can tell by the name, these futures are settled in US dollar stablecoin. On Binance, this could be USDT or USDC. Then we have what we call the coin M futures, which stands for coin margin futures. Here, if we trade coin margin futures, we are going to use coins like Bitcoin, Ethereum as our margin. Then we have the option. These I will not be teaching in this tutorial because I'll be focusing on USDTM futures. So click on USDM futures. By default, it's going to take you to a page that looks like this. And then I assume you already done some trade in the spot market and you already know the basics. If you are a complete beginner or you have not done any trade on spot, I would recommend you watching our beginners Binance trading tutorial that you will find in the link below. So let's begin. The very first thing you will see here is what we call the chart. This is where we take our technical analysis, and then here is the order book containing all the orders that has been placed, and then this is the section where we take our trades. This is the current symbol which we are seeing here. Now, the very first thing you have to do is you need to transfer some fund from your spot or funding wallet to or any of your wallet to your futures wallet. The futures wallet is always different from your spot wallet. There are two ways to do that. Either you click on the available balance here, or you scroll down and then click on transfer. Then if you don't have a crypto to trade your futures, you could either click on buy crypto to buy crypto directly into your futures account or futures wallet. And then you could use the swap if you want to swap. Let's say you have other crypto that you want to swap to USDT. You could use this to swap them. For me, I already have USDT, so I will click on transfer here. And then don't forget, the easiest way to do this is just to click on transfer here. Then I'll click on transfer. Here, we can choose where we want to transfer from. And then for me, I'll be choosing fiat and spot. You could either choose from your cross margin, your isolated margin, your coin. For me, I'll be choosing fiat and spot to my USDM futures. Now, here you could select the kind of coin you want to transfer to this place. Could be any of these. For me, the coin I have here is USDT. So I want to transfer USDT. Under this section is where you will enter the amount. For this lecture, I'll be using $1,000. So you could easily understand what is going on here. And then click on confirm. Now you could see that our available balance here is $1,000. And then our unrealized P&L is 0, meaning we have not taken a trade. This available balance here could be translated to what we call margin. Before we talk about margin, what exactly is futures? Future trading is when two crypto investors bet that the crypto will go in the opposite direction. Whoever wins pays the other trader or investor. For example, let's say you and John made a bet and you guys are speculating the direction of Bitcoin with 1 BTC each. Then John is betting that Bitcoin will rise to 80,000 from the current price at 70,000. And you are betting that Bitcoin will drop to 60,000 from the current price at 70,000. What you just did is called short trading or investing. Whereas what John did is called long trading or investing. Here comes the truth. Let's say Bitcoin price rose from 70k to 80k, and now you have to pay John 10k from your 1 BTC. This is called futures derivative trading or investing. The truth is, what if next time John is so sure that he will win again, then he wants to bet, but he doesn't have enough money to buy 1 BTC at 70k. Currently, he only has $10,000 and he needs additional $60,000. Since he is very sure of where the market is heading to, he now decided to ask a crypto exchange to lend him more money so he could invest or bet more. And the exchange agreed. Now, instead of John depositing the whole $70,000 to buy 1 BTC, the exchange will ask him to open a futures account and deposit that his $10,000. That $10,000 will serve as a collateral in margin trading or futures trading. This is called the margin or initial margin in futures trading. Once John has deposited his 10k, he will be automatically given the additional 60k he's asking for. Usually, the truth is, exchange could lend him up to 125x of his capital, meaning they could lend him up to 125,000. This money the exchange gave John is what we call leverage, and it's donated by X in the futures account. In the case of John, he wanted additional 60,000, which is 6 times his margin balance. This is equivalent to 6x in leverage trading or 6x leverage. Basically, a future is a contract saying that we will buy or sell a specific asset at a set price at a specific time in future. So with futures trading, we are basically speculating if the price on an asset will go up or down. In practice, we don't actually need to wait until the futures contract expires to get out of our position. If we want to close our long position, all we need to do is open a short position for the exact same amount, and that will cancel out the long position, or it will get us out of the trade. The profit or loss is then equivalent to the difference in price between the open long position and when we open the short position. Even though we might enter a future contract about buying or selling BNB or any other underlying asset, in practice, we don't actually need to buy or sell the asset itself. Instead, we can just use any available asset as collateral, also called margin, to fund our trade and pay up when we close our position. There are 2 main types of futures contracts. The very first one is what we call the perpetual, and then we have the quarterly contract. To locate this contract, under the symbol here, click on these. You could see here we are under what we call the perpetual. The difference between perpetual and quarterly, for example, this is BTC quarterly, you could see here, and then the quarterly futures are the ones that have a delivery date or expiring date, which is the date when our position will be automatically closed. So for this one, it will be December 27th. The very first 2 digits here is the month, and the last 2 digits here is the day of the month. For example, this is BTC quarterly that will expire on December 27th. Now we have what we call the perpetual contract. The perpetual futures, on the other hand, don't have a delivery date or expiring date, meaning we can hold Bitcoin on perpetual forever until we manually close it. For futures investment, what we use every time is perpetual contract. Never use delivery, because you might decide to hold a crypto for like 2 years and then you get liquidated. The reason why we hold BTC perpetual is you might decide to hold a crypto for 2 years. Under quarterly, it has an expiring date. It would automatically close whether you're on loss or on profit. For this lecture, I'll be using BNB, and it will be BNB perpetual contract. The next thing we have to talk about is the margin ratio, which we can see down here. But before we talk about the margin ratio, let's talk about what the word margin actually means. Margin is the amount of money we must have in our future wallet to protect both the trade and Binance from possible losses on the trade. So the margin acts as a collateral on our futures position. For example, our margin here is equivalent to 1000 USDT, which is how much we deposited. Then the margin ratio is an indicator to see how close we are to get our futures position liquidated. If the margin ratio hits 100%, liquidation will be triggered. What is liquidation? This basically means that our margin balance is too low to fund our position, so the system will automatically close them and we will lose our entire margin balance in the process. Basically, what liquidation is, let's say $1,000 I deposited now. If ever my loss gets to or gets closer to $1,000, especially let's say at $999, I will be automatically liquidated. Here, Binance will automatically close the trade for me so that I will not incur a negative loss. So that is what we mean by liquidation. So for example, if you're long on BNB, but the price of BNB keeps on declining, then the required margin to keep our position open might become higher than our available margin balance, which at that point, if the margin ratio hits 100, all our positions are closed to make sure we can cover our losses with the margin balance we still have. Of course, the goal is to definitely avoid liquidation. The easiest way to avoid this is you could either choose to transfer more fund or close the trade. Now, the maintenance margin here shows us the minimum amount of margin balance required to keep our position open. As we can see here, we are currently in the single asset mode, which means that only our US dollar theta will be considered as our margin balance for our open position in US dollar theta. When we switch from single asset mode by clicking on this single asset mode here to multi-asset mode, here we could use both USDT, BNB, Ethereum, or any other crypto as our margin. Meaning, if we were on single asset mode, if we get liquidated, what will be liquidated is just the USDT. For example, here, if I get liquidated on the single asset mode, I will lose just that $1,000. But if I ever get liquidated on the multi-asset mode, and then let's say I have 10 BTC on the multi-asset mode, I would also lose the $1,000 plus the 10 BTC. For me, I prefer to use the multi-asset mode and then click on it and then click on asset mode to go back. Now, when we go up here, currently we are under what we call the cross margin mode. What does this cross margin mode mean? This means that our entire margin balance, which is 1,000 US dollar, will be used as a collateral across all our open positions. When we switch from cross margin to isolate margin mode, then, just like I mentioned before, we will have a separate margin balance for each individual position. So with each position in isolate margin mode, we are only risking the margin that we allocate to that position. For example, let's say I allocate 200 USDT for BNB. If I ever get liquidated, I would only lose 200 USDT. But the problem with isolated margin mode is usually it takes less of a price move against us to get liquidated because the allocated margins is lower than the cross margin mode. Whereas all assets can count as collateral whether we want to use cross margin mode or isolated margin mode. It really comes down to how we want to manage our risks. So for now, I'm going to stick to cross margin mode, and it's the best thing to do if you are doing leverage investing. Then click on confirm. The next thing here is what we call the leverage. Remember what I told you, leverage is a borrowed capital from an exchange. Here we are going to be borrowing this capital from Binance. By default, you will see something like 1x leverage, meaning 1 times our $1,000. If we try to click on this and slide this to 75x leverage, it means currently I have $75,000 to trade with. If I move it to 45x, it means I have $45,000. How do you realize this? This is just multiplying 45 by the amount of balance you have. Here I have $1,000. It means 45 times 1,000 will give us 45,000. Many people make the mistake of sliding this to the last and clicking on confirm just to go here and buy everything at once. That is not what you should aim for. When you slide your leverage to 75, you could see that here it gives us the ability to buy 18 BNB, where 1 BNB costs 527. My 1x leverage should only buy 1 point something BNB if you look at it, which is here. Let me show you how to take a trade on Binance Futures. Remember what I told you earlier? If you want to predict that the market would go long or would rise, you open what we call the buy long. Then if you want to predict that the market will go short or the market will dump, you open a sell short. But before that, there are some other settings we have to make. On the top right hand side, click on settings, then account mode, leave it on the default, order confirmation, leave it the way it is, and then position mode. By default, we are on one-way mode. One-way mode means, for example, this BNB, I can only buy long here. If I try to buy short, it will automatically close my long trade. Whereas if I'm short and I want to buy long, my long would automatically close my short trade. When it closes everything. It doesn't mean it's going to leave you with a trade open. But on hedge mode, you could simultaneously hold both long and short. Let's say you don't know where the market is heading to, but you just want to take a trade. And you want to take a trade in such a way that you're not going to lose. Or let's say you are losing, but you want to take an opposite trade in order to make more profit and cancel out your loss. We use the hedge mode for that. So click on hedge mode. For the asset mode, we already selected the multi-asset. And then the price protection here, turn this on. And that is it for now. Few other things is, for example, if you want to cool off or you don't want to trade, let's say you incurred a loss or you incurred a lot of profit and you want to take a break, you can click on this cooling off period and then slide these, select the amount of days you want to be off from futures. Now we are ready to take our first trade. Look at the difference now. Once we switched to hedge mode, we could open long and open short simultaneously. To take our first trade, I would like to use BTC Perpetual. Hover over to the BNB symbol here. Search whatever symbol you want to trade. Here I want to trade BTC now. BTC USDT Perpetual. Always remember these. Now we're under the daily time frame. Drop down to the 1 hour. For these, I want to take a short trade. All I have to do is come to the right hand side. There are 7 different ways to take a position or open a trade on Binance Futures. The very first one is the limit order. Limit order here means we are taking a position or buying a crypto when the price reaches a certain price. For example, Bitcoin is currently at $57,500. Let's say we want to buy Bitcoin at $50,500. What we will be doing is we'll be using the limit order, and then under the price section here, we would enter the price we want to buy Bitcoin at. Here now, let's say we want to buy BTC when it drops to 50,000. Under the price section is where you will enter the price level at which you want to buy the crypto. Here, we should enter 50,000. The size here is the amount you want to buy. If you're not certain how much your margin could purchase, slide this bar here to whatever level you want to. 50% means you are using 50% of your margin. 100% here means you are using 100% of your margin. For this, I'm going to be using 100% of my margin. Another easiest way to know how much of your margin your crypto could buy is what we call the max here. Meaning my 1000 USDT can buy 0.002 BTC. That is the max. Now I'll be showing you guys how to take a trade using the futures. First of all, let's switch to 1x leverage and then click on confirm. And then the price here is where you enter the price level at which you want to buy a crypto. For this crypto, I want to buy Bitcoin when Bitcoin gets to 50,000. The size here represents the amount or the quantity of a crypto you want to buy. If you don't know the maximum amount or the maximum size your margin could purchase, all you have to do is come to this mark section here to see that For here, if we want to open long, we can buy 0.019 BTC. If we want to open short, we can only buy 0.015 BTC on this leverage. So let's say, for example, I want to buy 0.0012 instead, or 0.01. Click on buy long to open long, or open short to open short. The thing with limit order is, since we are buying below the current market price, we have to open long. And then when you open long, these will be placed under the open orders section here, meaning this trade has not been taken. When BTC gets to that level, it will be automatically opened. Now, if you want to close these, all you have to do is chase or click on close here to close everything. Click on delete here to close. For this tutorial, I'll be buying short using the market order. The market order means we are buying this crypto at the current market price. Unlike when we had to wait for it to get to 50,000 before it opens a long for us. Here, I want to buy this crypto and then 50% of my capital at the current market price, and then all I have to do now is click on open short. Automatically, our trade has been opened. Instead of viewing this under the open orders, it could be seen under the position section. Here is where it comes in now. BTC Perpetual contract here using 1x leverage. Our size was at 0.008 BTC, and then our entry price here is $57,000, 374.10. And then if we want to ever close this trade, our break-even point would be at 57,345.41, meaning we have to close it when the BTC is at 57,345.41. You'll be asking me, why we entered the trade at 57,374? We should close at 57,374. Why are we closing at 57,345 instead? This is where we call the Binance trading fee. Binance has to charge you for using the futures platform. So to break even point, you have to make some profit before you can break even. The mark price here represents the current price of the market. The liquidation is when we will get liquidated. Using this my $1,000 now, I would only get liquidated when BTC has finally gotten to $181,000. Our margin ratio here is 0.1. Remember, we can only get liquidated when our margin ratio is 100%. The margin for this trade here means the amount we use in opening this position. Because I'm on 1x leverage, I'm spending a lot. Here, for this position to be on, I use $459. Then the PNL here stands for profit and loss. If this is on red, it means you are losing. Here I'm losing 0.14 USDT. If it's on green, it means you are making profit. If you want to close the position, you could either choose to close the position using the market or the limit order. Or if we want to reverse the trade, like let's say you're already losing and you want to reverse this from short to long, you have to use the reverse button here. Now we already have a trade. When we come back to this place, you'll see that our balance has changed from $1,000 to $999.77, meaning our unrealized P&L here is being deducted from our total account equity. Now, we'll be discussing stop loss and take profit. Let's say I decided that I don't want to stay in this trade anymore. The easiest way for me to set my stop loss and take profit is under this open position, scroll to the right hand side. These TPL and SL here stand for take profit and stop loss. That is short form for take profit and stop loss. We take profit when we are selling on profit, and then we set stop loss so that we would not lose more than we should lose. For example, this market here on short is retracing back and we are currently losing 0.80 cents. If I decide now to set a stop loss for this, all I have to do now is click on add. When you click on add, it will automatically bring the take profit position. If you want to set a stop loss, click on the stop loss, and then if you want to set a take profit, click on take profit. The thing about take profit is it depends on whether you are going short or you are going long. If you are going long, meaning you are predicting that the market will go up, it means your take profit should always be above your entry price. If you are going short, just like what I'm doing here, meaning that I'm predicting that the market should dump, your take profit should be below the current market price. Here is our entry price, which is at 57,374. Let's say I want to take a profit when the price gets to just 57,000. This means BTC will lose 0.65 cents. And the size here is how much of my BTC I want to close. I might choose to close 50%, or I might choose to close 100% of the open position. My estimated PNL here means that I would only be making 2.99 USDT. Then when you click on confirm and then click on confirm, you already set your take profit. But currently I have not set my stop loss. We are losing 1.29. Let's say I don't want to lose more than $10 or $100 in this. I'll come back to this place, the TPL and SL, and then click on this add button. Then click on stop loss. Just like the take profit, the stop loss is almost the same way. Since I'm going short, it means if the market goes long, I'll be losing. Our current entry price is at 57,374. I would not want this crypto to go beyond 58,000. At 58,000, I will want to close the market. So here on the stop price is where I will enter the 58,000. That means BTC will rise by 1%. You could choose to slide how much percent you want to close when BTC gets to that price. At that price, I'll be losing 5 USDT if I closed my whole position, and then I'll have to click on confirm. Now you could see that from my entry, BTC has risen up to 0.26%. That is it on how to set a stop loss and take profit. Once you set a stop loss and take profit, it will automatically be seen under the open orders. If you want to close this trade, let's say you don't really want to stay here and wait for everything to exhibit the way it is. All you have to do is, under this close all position, either click on market or limit. The market here means it will be closed on the available market price. This is the least advisable mode to close a position. Let me give you an example. We are losing $1 here, yeah? If I close this market with this $1 loss, what we should see is at least $998. But let's try to close now. You will see using the market order. It has automatically closed. Now, if you look at this place, you will see that our available balance is just 998.0, whereas it should have been 998 point at least 56 cents. But what we have here is just 998, meaning Binance choose to close at what available price. Usually the available price are always higher than the current market price. Had it been I use the limit order, what I could be seeing here is at least 999 USDT. So that is it on Binance Futures trading and how to take trades on Binance Futures.